everyone, welcome and thank you so much for joining VistaView Solutions Q&A Cafe on fixed asset procurement and SAP Business ByDesign with your host, Alex Waddell. My name is Catherine and I'll be facilitating today. We'll be recording this session, so everyone will remain on mute, of course, and then the recording will be sent out within a couple of days. If you do have any questions, please feel free to type them into the questions or chat box window at any time, and we will make sure to answer them near the end of this presentation. And of course, please don't forget to join us for next week's Q&A Cafe on Wednesday, February the 17th, on organizational and work distribution rules in SAP Business ByDesign. You can find registration information about that on our resources page on our website, or of course in the email sent out in a couple days. So without further ado, I will hand it over to Alex.
Great, thanks, Catherine. Welcome, everyone. So as Catherine mentioned, we are looking at fixed asset purchasing or procurement today. And there's a lot of different components to fixed assets. So we are specifically going to focus on procurement and very specifically two elements of fixed asset procurement. So I won't bore you with too many slides, but I do have just a couple to show you. So there are multiple methods for acquiring assets into the SAP ByDesign system. I'll speak to each of them. I won't demo one of them because it's quite complex and we could do another Q&A cafe on that. But I think what's important to understand is when deciding what's the right method for you, there's a few different considerations and we'll get into the details of that. But at a high level, the things that you're going to want to consider is the type of controls of the asset setup in the system. So there are certain advantages and disadvantages to the different methods, depending on whether things are automated versus manual. So typically with automation, you probably have less control over how your asset is going to set up, especially as far as like descriptions and things like that. Whereas in manual, you may have extra steps, but it gives you a bit more flexibility. So depending on what your objective is, and maybe even the sort of asset accountant you are and the kind of detail you want in your fixed asset subledger is going to influence your decision there. The other thing you're going to want to think about is thresholds for capitalization. When we are looking at the automated way to create that, I'll show you the grid for where we set that up. And that's going to determine the type of capitalization that you want to do. So if things are below a capitalization threshold, they may be expensed or they may be expensed in the first year, depending on those various thresholds. The effort around setting up assets. So if you're considering the volume of assets versus the cleanliness of data when done manually, consider the volume of assets. If you are purchasing a high volume of assets, likely you are going to want to look at some automation in your procurement to create the assets automatically inside the ledger. If, on the other hand, you are purchasing a low volume of assets, but maybe high dollar amount, then whether it's manual or automated is not going to really impact you significantly. And then individual asset purchases versus capital projects with complexity and different accounting treatments. So this kind of gets into the third way to do procurement, which is using capital projects. So let's look a little bit around the configuration. I'll talk more about those three different items. So these two configuration elements I'm showing you now relate to the automation specifically. So if you are going to do automated asset procurement versus manual, you are going to have to set up a couple of additional screens that you may not have set up in the system. So this is in the ByDesign configuration screens. So yeah, as far as your ByDesign configuration screens, because there is no specific way in the purchase order in the buying documents to select a fixed asset class, you're going to have to tie a product category into a fixed asset class. So this screen is very straightforward. For each company, you can use either the same or you can use different fixed asset classes to tie into, and you can see here that I've just sort of tied both of my company 1000 and 2000. I've used the same product categories and the same asset classes in both companies, but I'm tying in a product category specifically called IT equipment into a fixed asset class called PC printers and similar equipment. So they don't have to be named the same, they can be named the same. It's all up to you. When we get into the examples, we can talk a little bit about those product categories and whether there are exceptions to them being fixed assets. I will show you that when we get into the system. And then the second screen that you're going to want to do some setups on is your capitalization threshold for fixed assets. And I've highlighted in yellow in the center, this is a comment you'll see on the screen or an instruction, which explains that in the screen you can define the value range of low value assets. You do that by accounting principle. So right now I've highlighted US GAAP, and I've set up a threshold with a minimum of 1,000 and a maximum of 3,000. So what that means is there's actually 3 different tiers in this setup, and that's what that comment is explaining. So fixed assets that have a value less than the lower amount are posted directly to expense. Fixed assets that have a value within the range are marked as low value assets. And so they go into the valuation view, but typically those will be depreciated in the first year. And then anything above the maximum would be capitalized for the full valuation of that view. So whether it's a 3 or 5 or 10-year asset or whatever you've set it to. And then we get into the specific procurement options. So we are going to look at option 1 and 2 today. So option 1 is to purchase an asset to a clearing account. If you are doing asset procurement today in the very simplest form, this is probably what you're doing. And maybe you're here because you're curious about other ways to do it. So this is the fully manual process. And what we're doing here is we are simply denoting a payable purchasing document to an asset clearing account. And then there's a separate acquisition step on the asset that's done by the asset accountant. So that would typically be done at the end of the month. They would look at any transactions that have accumulated in that fixed asset clearing account. And then they would do a transaction in the subledger to create the asset, thereby debiting the fixed asset account. And then they would indicate the asset clearing account. So that's the manual solution. Advantages and disadvantages to that we'll look at when we do the example. Option 2 is the more automated way. So the receipt of the asset creates an asset in the asset ledger, and then the capitalization depends on the thresholds. So this option specifically involves those 2 setup screens we just looked at. The first option does not require those setup screens. And then the option 3, assets purchased through an under construction project, remain undepreciated until the project or a component of the project is placed into service and fully capitalized by asset accountants. So let's flip over to SAP and have a look at the 2 options. So maybe for simplicity's sake, I'm going to do the first option, which is the manual process. You may or may not be familiar with this, but just to sort of contrast that. So we're gonna just grab a supplier. We're gonna use a company. And I could do this either as a purchase order or as a payables document. I'm going to choose the purchase order. And what I have done in this particular case, so we'll just call this, well, maybe we'll just figure out an asset. So we'll call this server for SAP, something like that. And we're going to give it a ship to location. And some amount. And we don't necessarily, the GL determine isn't going to be driven by the asset. So it doesn't really matter what the product category is, because in this particular asset, in this particular case, I'm going to drive this to a GL account. And so the way that I'm going to do that is I'm going to create an expense type of PO so that I can choose a balance sheet account, a fixed asset clearing account. So without getting into a long-winded sort of discussion on the nuances of 3-way match and purchase order, this particular option or this particular scenario allows us to create a PO to a balance sheet account, but there won't be a receiving transaction because I flagged this as an expense. So if you want to discuss, different nuances of that, feel free to drop in a question and we can discuss some other options there. But this is just a simple way to do this one. So I'm going to place this one on order. So that's 14,000. I didn't go into the advanced view to set tax. So there should be a tax transaction on that. And so we've created purchase order 909. Now I'm going to just drop into our supplier invoicing. So as I mentioned, I don't need to do a receiving transaction because of that type of PO. So I can directly create an invoice on this. And so you can see the system's added tax, so that's where our amount's a little different. Just going to drop in the minimum information we need to get this one to post. And we should be able to post this document. And we have document 2124. And I think we've been recently doing some testing on approvals here. So I apologize, this has gone into approval. So bear with me while I get this document approved. So if you've never seen this before, this is just sort of a sysadmin area you can go in because I'm not the approver, assigned approver, so I'm going to force it over to me. And then I'm going to go into, if you are using approvals, you're familiar with this, you go into my approvals and you can approve your invoice. All right, so a few different ways to get to that transaction. Probably easiest is for me to just go to the journal entries. And there's our 2124 entry. And so we can see here a credit to accounts payable and a debit to fixed asset clearing. So 100% manual. This asset is now sitting in a clearing account, which is a non-control account. That's an important thing to understand because you cannot have your buyers or you cannot set up a GL determination for your buyers to directly post to your fixed asset accounts because they should be flagged as control accounts. If they aren't flagged as control accounts, then the fixed asset subledger doesn't really realize that you've created that asset. So this manual method involves the clearing account that it's a non-control account, and the expectation is account 129,000 would be reconciled every month by some sort of capital accountant who would bring that balance down to zero by capitalizing. Or potentially, if you do have very simple assets under construction, you could leave the asset in there. You could even call this account assets under construction. So that's another way to use assets in construction without all the complexity of capitalizing internal labor and things like that. And then when this asset is brought into service, you could also credit out the balance of this account through the transaction that I'm about to show you. Or potentially you could credit out multiple purchases, for an asset that you're building once you're putting the asset into service. So the concept is exactly the same. So now we're going to assume it's month end. The capital account has gone in. They see an amount in here. They've got the necessary paperwork and they want to set up the asset in the system. So they're going to go into the fixed asset subledger. And they can do this either directly through the new fixed asset screen. They can also go into the listing. I'm just going to grab my amount here. So I have to go look it up, see if that worked. So I'm going to go into my fixed asset subledger and I can hit the new button from here. And this is where the fixed asset accountant now has some control over how that asset is set up. So if you have a detailed invoice in front of you, you have serial numbers, you have things like that, this is where there's one advantage to the manual solution because it's giving the fixed asset accountant the ability to kind of set up that description the way that they want. So you could consider that an advantage to this manual method. And of course, they're the ones that are going to have to decide what sort of an asset this is. They're going to decide which cost center is going to absorb the depreciation expense. Typically, that's like a finance cost center. And then it creates the asset, so that's step one. And then the second step, so the asset will be sitting here as in process. And that really is meaningless. Like there's going to be no depreciation, nothing is going to happen to that fixed asset until there is an actual acquisition event to bring the dollars in. So now we've created the bucket or the placeholder for the asset. Now we have to do the financial transaction to actually create something in there. So they can highlight the row, they can click the manual posting buttons and do acquisition. Alternatively, you could open up the asset into the view all mode. There's not a lot to see here except for the first two tabs where you've got some information that you've just set up on that initial screen. And from here, you can do the manual posting acquisition. So same result either way. And here is where we're going to drop in our amount, put in your description. So, you know, we're going to set into service and clearing. And then we're going to look for that fixed asset clearing account. And you see there's a whole host of accounts. So, you know, depending on, you could, in theory, capitalize things that maybe accidentally got coded to a different GL account. So where you acquire the asset from is, you've got flexibility there because you've got access to your entire chart. So we can simulate this entry, and then what I would expect to see is a debit to my true control account that I mentioned. This is the only way to get an entry in there. I can't do a journal entry. And now I am zeroing out that payables event. So I'm going to go ahead and post this. And if we refresh our screen here, we can now see that our server TX has been fully capitalized. If we want to go in and explore this asset, you know, I'm not going to get into a whole training on fixed assets. Once again, if it's something you're interested in, happy to set up other sections, but we can see now what the depreciation, expected depreciation based on whatever depreciation method was set up for this valuation. So this one's ready to depreciate over its 5-year useful life. Okay, so that's manual option. Let's look at a more automated option. So this is the one where those setup screens came into play. So I mentioned the capitalization threshold screen. So we've gone in here and I have actually set up a 1,000 minimum and a 3,000 maximum, meaning that I've got my 3 different tiers established. And just a little side note, I've only set that up on US GAAP. I didn't bother setting it up on the IFRS. So you'll see the behavior of doing that. And then the other one is underneath the fixed asset class setting. This is where you would go in to set up your determinations. So you could set up specific product categories that you want to use for capital purchases. You would set up the product categories the way you normally set up product categories underneath the inventory work center. Or you could use product categories that currently exist in the system, depending on your needs and the type of capital purchases. So what I mean by that is your IT equipment could sometimes be the same category you use to put on a purchase order for any type of office expense, and then you're using those thresholds to decide when to capitalize and when not to capitalize. Or you could set up specific fixed asset product categories and train your buyers to kind of search for those categories. It's really up to you. So you kind of have to kind of do a little bit of design decisions there when you're doing this. And then once you've done those product categories, here's where you would go and tie them into your fixed asset classes you've created. Okay, so with that, I'm just going to close out of here. We're going to do another purchase order. And I will pick my vendor, pick my buying company. And I'm just going to do a PO with all 3 of those scenarios on the same PO, save us a little bit of time. So some considerations that are here. This type of PO, we're buying it as a material item. And then we're making a decision here. And so this is a bit of a buyer training event because there could be different behavior depending on whether you're choosing non-stock or stock. So what I mean by that is you could have the same product or product category. Well, not really a product category. You would have to have a product configured, but the product would be tied to a product category that you are either capitalizing as an asset, or you are, putting it on the balance sheet as inventory. And that would be influenced by whether or not your buyers have been trained to make the right decision here. So am I buying this to my stock, or am I buying this to non-stock, meaning there could potentially be a capitalization event. So if you're wondering what kind of scenario that is, imagine you're a company that sells expensive equipment. but you also rent equipment. And so you have to decide when you purchase that equipment if it's something you're bringing into your rental pool or something you're bringing into your inventory. And this field is what's going to influence that. So hopefully that's clear. So we're going to do the specific one, which is non-stock. So I don't want to capitalize anything here. I'm not going to choose a product anyway. And let's say that I'm going to do something as a large asset here. So let's call this boardroom large monitor. And we will make this, well above our threshold, our maximum threshold. So let's make this, say, a $7,000 item. And we'll have to select our cost center, make that finance. And once again, I'm not going to worry about tax or anything on this. I'm just going to let the defaults ride. Then I'm going to add another row, and we're going to do the same sort of thing. And then let's just say laptop for executive. And laptops nowadays are fairly low value. So it's something that maybe you don't necessarily want to treat as an asset that you're going to depreciate over a bunch of years. So because of those capitalization thresholds that I said, 1,000 to 3,000 are those are inside that tier. We'll just set this one to be $1,500. And the same cost center. And let's just say this is now going to be desktop monitor. And this is something that's very low cost, so it's underneath our $1,000 threshold, so we likely want to expense it. But we're going to run them all through the same product category. So my product category is going to be my IT equipment, or my IT equipment, so my 102. So I'm going to do them all to that same category so we can contrast the effect there. So let's just do a check on this. Looks like I got it all right, and we're going to put it in order here. Okay, so PO 910 was supplied, and now we're going to do a receiving event on this document. So I mentioned there are pros and cons to both of these situations. This is where I feel we kind of get into our first significant con with doing the automation. I'll explain. So I'm going to go back to my purchase order screens. Let's take our 910 item and let's pretend I'm a receiver and I'm now, actually receiving all of this equipment. It all came in at the same time. And at this point, this is where you have a training issue. So you have to make sure that either your buyer, your purchaser, or your receiver has been trained to do this step properly. They're going to have to create what's called the new individual material. Now, this is, if you're familiar with operating inventory in SAP ByDesign, you are familiar with individual materials. This is like I believe it's a 7 or 8 digit number that's assigned to all of your items. Works the same way with your assets. When we did the manual step to create the item as the fixed asset accountant, I went in and I created that server. The system behind the scenes automatically generated this individual material ID. It does not do that automatically with this solution. The user has to do it. So I can do it all at once. I can click on my new individual material button, and it's going to create a little panel down here, and it generates those IDs behind the scenes. If they forget to do this step, what you're going to have is a transaction that kind of gets hung up in I believe it's in your source documents. And the only way that I know to rectify that is you're going to have to cancel the goods receipt and do the individual material and receive it. So the reason this is a fairly significant downfall is if you think about your receivers, they're probably doing all sorts of goods receipts all day long into the system. And it may not be obvious to them all the time when they're dealing with a fixed asset one versus just a regular item they're receiving into the system. So once again, it depends on your organization, the type of items you're buying, the volume of assets, and how you're going to train those receivers. But I can say that I have had clients in the past that loved this and then ultimately went back to the manual solution because they had too many problems with their receivers forgetting to do this step. So that's an unfortunate element of this. Maybe SAP will improve on that in the future. If anyone else has come up with a better workaround for this, I would love to know it. So I'm going to go ahead and I'm going to post this. I will also mention that you could train your buyers to assign the visual material on the PO. They have to go into the View All tab, but they can get to the button to do it there. So that's a second option if you think it's easier to just do it on the purchase order. And I think what I have had is I've had one client that set up a approval procedure for the PO. So if it is a CapEx purchase, it goes to the capital accountant, and then they go in and verify that that step was done. So they could reject the PO and get the buyer to do that. So there are some things you can do to kind of make sure that that step doesn't get missed. All right, so let's just kind of drill down to some entries here. I'm going to pop into our PO. We're going to go to our document flow. Oh, that's not good. Oh, I'm getting an error there. That's okay. We'll just go to our goods receipts instead. See what a better luck here. Yes, okay. So there's a purchase order 910. Here's our goods receipt. Let's have a look at the journal entry. So if we kind of decipher this, so remember there's tax, so that's why you're seeing these amounts slightly different than what I put in. But you can see that we have something just hitting our material consumptions. That's probably just the way that particular product category was set up. I would probably set this up to be more like office supplies or computer supplies or something like that. But that was for our low value monitor that I think we put in for $300. So immediately goes to the expense account. Now our other two items that are on those different tiers. So this was our, I think it was our laptop for $1,500 with tax. That is getting capitalized. So you can see it's actually hitting your control account for your IT equipment. The same thing with the large boardroom TV that we put in for, larger than 7,000. So both of those get capitalized, but I'm going to show you inside the asset system that they get treated slightly differently. And now let's pop into our fixed assets. And so here's kind of where the automation magic has happened. This step has happened completely outside of the fixed asset accountant. So all of these items were created automatically in the system. And that is all because of those configuration screens that we did on the product category and the capitalization thresholds. So that's fairly cool. I mentioned that you don't have as much control now. So if you don't like the way your buyers are putting in descriptions for things, if as a CapEx accountant, you want to have serial numbers or really detailed, details of what the asset is, they're still going to have to go back in here and clean up the description. Otherwise, it's just bringing in exactly what was on in the purchase order. I will make one note that you can do that whole configuration with specific product items, not just product categories. So you could create a product item for the specific laptop or server. That is what you would do if you were the company that I explained, buys and rents assets. You would probably set up specific items, and then you would have, very detailed descriptions probably in your item master setup. So in the case of the desktop monitor, this is a little bit interesting. It is registering this item through your fixed asset module, but you'll recall it completely expensed the item. So, and sorry, let's go to our US GAAP, panic for a second. So you can see that there is no valuation here at all. So there's nothing in depreciation overview. There's nothing in the book value. So this could be useful because a lot of times you want to track the fact that you bought the monitor. You want to know the serialization. I know a lot of our clients will set up extension fields where they put in information like who's responsible for the asset, which office it's located in, or which branch it's located in. So you may want to track that you actually own this monitor and who's responsible for it. But from a materiality perspective, you don't care about it. You don't want it to be on your books reflecting a dollar value. So you have the advantage that it's here in your ledger, but you don't have to worry about dealing with any kind of depreciation. And just to go back a row where I had before, you'll notice that in the IFRS, we do have depreciation happening. So as you recall, in that capitalization threshold screen, I only set up US GAAP. I did not set up IFRS. And that can be useful because sometimes you do have to do a different IFRS treatment of assets than US GAAP, and that's exactly how you would support that. Now let's go and have a look at our laptop. So our laptop was the item that was on the second tier. So this is considered a asset of low value. And because of that, so once again, let's look at the US GAAP. The system is going to do the depreciation automatically. So it will book it through your fixed asset control accounts, your acquisition cost, and then it's going to do the full depreciation in fiscal year 2021. So you can see that there's no depreciation beyond that. And then in our IFRS books, you can see that it's treating the asset differently because we didn't set up those thresholds. So same as before. And then if we go into our large $7,000 item, get right to the values. Once again, let's look at US GAAP. So now this one is being treated as a regular asset. It was above our maximum threshold. So this is a 5-year asset. It's going to depreciate that asset over the full 5 years. And so that's how it's going to amortize the expense. And then once again, yeah, so an IFRS is treating it pretty much the same way. All right, so let me just pause there. I've said a lot. I haven't seen any questions pop in, so either I've made this super clear or nobody has any questions. So if you do have any questions on this process, now's the chance to pop them in there. If you have questions on something else around the fixed assets, or you want to see a more comprehensive view of assets under construction or asset training, we're happy to also, take those comments, and we will put them in our little idea panel for future sessions. So if there are no other questions, then that's great. I want to thank everybody for attending today's session. I hope you got something out of this, and I will turn it back over to Catherine. Thank you.
Yeah, thanks so much, Alex. And thank you so much, everybody, for attending today's Q&A Cafe. Please make sure that you join us for next week's Q&A Cafe. Again, that's going to be next week on Wednesday, February the 17th, on organizational and work distribution rules in SAP Business ByDesign. Please stay tuned for the recording that we will send out via email in a couple of days. Thanks again so much, and I hope you all have a wonderful rest of your day.